What's up, guys? Welcome to another recap of your daily Aurinia trade. And this is a trade for AUPH for Wednesday, February 17th. Just a couple things I want to point out, starting, with the daily chart. The screen lines are 20 daily moving average, and this orange ones are 20 exponential moving average. This light blue one's your 50 exponential moving average, and then this is your 50 moving average. Today we had a green candle. And today was a very important day because for those of you guys that have been keeping along, after yesterday's close, we saw a very very bearish, price action signal. And this was when I said, last night in my trading channel, I was like, hey guys, like you might, start looking to, get out of the trade if it doesn't go your way, or cutting your losses, or start looking to exit, not necessarily wait till you get a profit, but start looking to get out, to minimize your losses. And the reason for that was because when this play originally unfolded, and I told you guys that this play was on, it was a day that this dipped below its 20 moving average, and it actually ended up recapturing this one, but more importantly, ended up closing at the 20 exponential moving average. On this day, it closed below, right? Here, it opened here. It opened here at the top, right above it, sold off all the way at the bottom. And this was actually very bearish, but the fact that they managed to recover and bring price all the way back to the 20 EMA was actually a very positive signal that this was not ready to dump. Rather, it's, it's selling off and it's ready to recover. And in fact, the next day, you saw a small gap above it. You saw a sell-off below. It bounced off the 20 moving average, and then from here on, you just had a rocket ride. And ended up making a top here. This was actually the day that the S&P 500 was also somewhat kind of red. So it kind of took down the momentum, and it pretty much reversed course of how this stock was going to trade. And so for the next 4 days, we ended up getting red candles. On this day, we actually ended up getting a small bounce here. We closed here. I said, hey guys, if we want to keep this going up, it has to stay above this candle, right? So next day it ended up, opening here, and it actually got sold off all the way to the bottom. It closed very close, but since it closed below, I said that this was in essence a bearish setup. The next morning, it ran up to test, the 20 EMA, and pretty much as soon as it started selling off, this was a very bearish signal. And even though it got, kind of reversal throughout the day, I said, you know what, like, this is now going to be resistance, and this trade is now more likely than not about to go against your favor. So what ended up happening today is, we actually ended up gapping below. We ended up gapping up even lower, which is what happened after hours in pre-market. And so it started selling off, but it actually ended up getting the bottom. Where did it catch the bottom at? It ended up catching the bottom at the 50 EMA. And the reason that's important is because this market likes to find support and resistance at the moving averages, and the short one is the 20, right? The intermediate is the 50, and then there's the long one, which is the 200, which I actually have hidden. I don't have it drawn out, but the 200 is around the $15 mark. But since this most recent price action has actually been higher, it actually ended up pushing the moving averages higher, right? So it actually ended up finding the bottom at 1520, which at the time was actually the 50 EMA, which is actually now up to 1522. And the fact that I was able to, bounce from here, get bought all the way back up, and actually cross above the 20 EMA, that's actually a very, very bullish sign. It means that this right here is a reversal candle. Now, one thing to look at is, as you can see, it kind of found a top here and it found some resistance here. Is this top indicative of a previous price level that was visited by the stock? And the answer is yes. And this was the high of this day right here, right? So that's why you found some resistance here. So in order for us to keep moving forward, tomorrow we have to break through the 1606 level, but also we have to break through this orange line, which is the 1620 range, which is about the low of this day and the low of this day. And if we can break through above this, then our next true resistance point will probably be around the 1674 mark, which was, the high of this candle and also the high of this candle. And so you can kind of see, like, the more times the number comes up, the more important it is. But as of right now, this trade is still good. If we would have broken through this level, this would have kept dumping, and it would eventually like to find the 200 moving average, which would have been around $15. If that gives up, it tries to find its next support. But the fact that it made such a long range is actually a very good sign. Now, the only thing is that there wasn't much volume um, compared to prior days. And that's usually okay, because as you run towards earnings or on a short week, you don't tend to see as much volume as, like, after a big announcement or whatever. But there has been actually quite a big spike in volume after hours. I just saw an order go for about 300,000 shares, another order go for about 50,000 shares. And that's about 10% of a daily's worth volume in an hour after hours, when there shouldn't be much volume. So that's telling me that it could be that institutions might be buying it, and that on its face makes for its bullish case. So essentially, what we're looking at for tomorrow is we want to this moving average, the 20 moving average, will probably be around the 1625 mark. So what we'd like to see tomorrow is, firstly, we want to see a gap above this high, above today's high and above this high. And once we can get above that, test the 1623. If this is broken on the first try and this just keeps running up, then you're in for a very good green day. Now we should expect resistance on the first try, because that's usually what ends up happening, 70% of the time. The other 30% of the time, it's not resistance, it just keeps going up. And once we cross this orange line, we can cross up to this teal line. And once we can cross the teal line, then we can start talking about numbers higher up than this. But what we would like to see, is a green day with a relative increase in volume. And so it's gonna be it for today. I apologize for not giving you guys an update. I actually went traveling on Friday, and then Monday we didn't have anything. And well, yesterday, Tuesday, I actually spent the whole day recovering, and I actually did not end up doing anything because I still didn't know what to end up making of this candle. But today we got one of those signals that says, hey, you know what? Like, we're still good. As of right now, I do have shares and I do have call options for the mid March. And then I just want to also remind you guys that earnings did get pushed up to next Thursday. So sorry, next Wednesday afternoon. So keep an eye on that. That might be a major catalyst for its next leg up. But as of right now, this setup on its face means that it's ready to start its next leg higher. Where it would fail would be if it breaks below the 50 EMA. And the reason it's going to be that is because the 50 EMA was what offered the support level. If it breaks below that, that means that support failed. But as of right now, I think we're looking good. I'll give you guys an update tomorrow to see how everything ends up unfolding, and then I'll catch you guys on the next one.